Welcome back, guys. Good evening. This is my daily videos on Euro, US dollar, and DSY, and this is the episode for today, which is March 12th, 2024, and also Tuesday, which did not give us a good expansion because every Tuesday and Wednesday we are looking for the highest expansion of the week. So if Tuesday did not give us the highest expansion of this week, likely tomorrow is going to give us what? The expansion. Then unlikely Thursday is going to give us. Now the highest expansion for last week was what? Thursday. But now but now the main expansion occurred on Wednesday. Now there are symmetry, kinetical symmetry that we use to measure this expansion. This Wednesday expansion actually creates the level up for Thursday. So we want to see that on Wednesday or Tuesday so that we can have a conclusion for what? Thursday and Friday. So if Tuesday is kind of ranging, we want to know what Wednesday is going to give us. And why I'm saying this statement before I begin this video is because it's very important as we are going in tomorrow, which is Wednesday, and also today Thursday has already given us what today Tuesday has already given us what? An indecisive and a ranging market. Although if you look on the lower time frame, it is liquidity was specified. Like you can actually mark out your areas of interest, and you can see that it also do offer diligent what pips amount of pips. So on that case, we I want to draw your attention into what I call the highest expansion for the week, which is tomorrow, or likely Thursday or on Friday. But we're going to see the kinetical symmetry of this market for this week. What is this week like? The whole week, we already know that the expansion for the week, we were looking for bullish scenario for the week, but with the current price delivery and the whole scenario behind this market delivery right now is positioning us for what? For some kind of what? Liquidity efficient market, or some kind of a weekly ranging market. So if this week continue on a specified range, then it will lead us to the formation of it will lead not us it will lead the formation of what? A weekly fair value gap, and which next week we are going to utilize that weekly fair value gap. I don't know if you follow me up. I've been calling things like this before, and even before it happened, like this area before this inversion fair value gap happened, I call it out before it happens, right? So there are scenarios for this kind of what? Market symmetry, but we're not going to be faster than our shadow. Rather, we're going to observe critically and just propose, and let's see what the market disposed. Right? I think this statement will go well than just saying we are projecting. Let's propose our will. Let's see what the market propose. But we are not going to force our will on price. That is just the difference. You propose. It is fine that you say you want to see bullishness or bearishness, but it is also great that you don't force yourself trying to make it bullish. You cannot. It will always deliver how it wants to be. So we already taking 4 minutes off of our time, but today is not really much something to say. So I will dive into what we have today and explain. Then if we still got time, we can chip in about tomorrow. Now, the Euro US dollar daily contract for Tuesday, 12th March of 2024 deliver as an indecisive up close candle that sweep previous day low, which is the sell side liquidity, as called out from yesterday market projection. Now, on the daily contract, Euro has shown a willingness to price higher as the sell side the sell side liquidity is sweep and price rally higher afterward. Now, what I'm trying to say is that yesterday we call out the previous day low, which we already taken this low, right? We take the sell side and market rally higher, and we have an indecisive what up close candle. You can see just a little green candle, right? Nothing much, just a little green candle close. Now, on the day, from the current market observation, now on from the current market observation on euro, if markets keep price above today low, that will lead to the formation of a weekly fair value gap, which will be effective next week, and it is going to be traded as an institutional order flow entry drill. Just what I've just explained. I think I've even forgot that I write something like that on my notes. So it's just everything I have just said now, and I'm trying to tell you what you know what that this observation could lead us to. Now, if euro find its way lower or higher, I am anticipating for tomorrow price action to show its price volatility, as it is likely to be the highest expansion for the week. Now, likely, I didn't say it is going to, but I say likely. Now, if we price higher for buy side liquidity tomorrow, and that will indicate Thursday and Friday will seek sell side liquidity. To determine tomorrow buyers, we will need the intraday volatility. What am I saying is that with the current market condition, we cannot just say if we are going to focus if we are going to focus our attention towards only tomorrow candle, we're not going to say that we are going to see buy side or sell side taking. Now we will need the help of what lower time frame volatility to determine that, which we are going to come to that, especially on a 1 hour candle. And also, if with what I've written, if euro deliver up close, if we take buy side liquidity tomorrow, then there's a likely high chance that on Wednesday we form the high of the week, and Thursday and Friday will likely form the low, or Thursday will likely form the low of the week. So that is just my observation. So we're going to go to the daily contract on DXY before we go to the lower time frame. So this is the Euro US dollar daily contract. This is the DXY daily contract. All right, dollar index. All right. So now this is where it gets critical. Why is that on the dollar index we can see that we have rally price show. The candle today shows that we have tapped on that those inefficiency weekly inefficiencies that I mark out. We've tapped on one and markets move lower impulsively, right? Which is going to which also indicate that tomorrow is likely to seek what sell side liquidity. And if we are seeking sell side liquidity on the SY, that means euro will be seeking what buy side liquidity. So with this narrative in mind, we can conclude that we are likely to see to s- uh, to see euro seek buy side liquidity tomorrow. How far can it go? That is one of the scenario. Maybe we can measure that, or we can take today high, tomorrow high. That is depending on how far it could go. Then also we can see that this is a rejection candle, and if this should be effective, we are likely not to see the market get here, maybe for get above this candle, and then that will indicate that Tuesday we form the high of the week for the XY, and Tuesday we form the low of the week for euro. So with all these consecutive narratives and all these parameters behind the scene, because it's behind the scene, it haven't show its footprints on tomorrow price. So currently everything we are saying now is behind the scene, but whatever happened behind the scene will display or on the scene. Okay, that is something that you have to be very very mindful of. Although it could vary, but the varieties is only effective with what is shown behind the scene. So now, having all this in our bias, we could say that if tomorrow gets lower, then Thursday might, show us willingness to go higher, or on Friday. That is, if we get lower tomorrow, then we have make use of this fair value gap. Then Thursday and Friday might take us towards this area, even if we did not get here. Then next upper week, Monday or Tuesday, might tap on this point a little bit, then we're going to see a drop in this market. That is, it's going to drop impulsively lower. So that has brought us to the 4 hourly candle, or 4 hourly contract for Euro US dollar. The Euro US dollar 4 hourly contract showed nicely how price keep trading on a specified range in today's trading. Now on the 4 hour, we can see how Euro fall short of the ICT 4 hourly bullish order block by 1 pip, which is cost to what 10 points, and price rally higher afterward. And also we can see that price lower is price uh is moving lower slowly, which indicates a higher volatility when we price into the PDR race. Now, what I mean by that is the fact that if you see how we are moving lower, it is going like step by step low. It's moving step by step lower, and it's slow. The price move is slow. So that means that when we get to a higher time frame, right, or when we get to our PDRA, which is the PDRA that's going to be effective, we are going to see a sharp move higher, and that would be very very fast. That price delivery will be very very fast. So now, if you look at this, we did not tap on this 4 hourly bullish order block. All right, we did not tap on it. We fall short of it by 1 pips, which is 1 pips, which is also 10 points. On the lower time frame, you will see that clearly. And if we the way price reverse impulsively, which also is indicating a very much more information, then if we are likely to take out this swing high and this swing high on a 4 hourly time frame. So tomorrow I'll be looking towards these two swing high, but I'm not sure about this high. But intraday I'll be looking at these two highs, and also I'll be very conscious that it might just continue going lower. All right, if we are eventually going to tap into this bullish order block, and also maybe this inefficiency. All right, so that's it for the 4 hourly contract on Euro US dollar. So that has brought us to the 4 hourly contract on the XY. Now look at how the XY is showing. Of course, you do we let me say, do we need anyone to tell us now that the market is going lower? No, of course we don't need anyone to tell us that, because we can see how we reject that area and price keep on. I wish, or that is wish and my will. Now, if I'm trying to force my will on price, I will say that this must get us into this bearish order block, or else no, that is my will. I'm willing for to see price get into this area does not mean price has to respect my will. Now, with the current price delivery, it is already tipping us. They are actually tipping their hands to us to show that we are likely to continue our lower prices from this range. But I am not anticipating that to be very impulsive. All right, so if we are going to utilize the fair value gap that is going to be created, which is on a weekly time frame, then there is need for us to keep on a range. But if this move deliver so impulsive, then that fair value gap might remain on tap until price eventually reverse back into that area. So we I think with this we have more clue on euro US dollar, and we know how we can actually project and anticipate for price move going in tomorrow, next tomorrow. So that has brought us to the hourly contract for euro US dollar. Now, the Euro US dollar hourly or 60-minute contract shows nicely how price is delivered efficiently into the trading range for Tuesday, 12th of March 2024. The daily profile is an obvious 8 o'clock AM New York local time as the high of the day that swept the London high and the what is it called? Both the London and the Asian high, and deliver lower impulsively into the previous day low sell side liquidity. Now, the low of the day is formed at 9 o'clock AM New York local time that falls short of the 4-hour ICT bullish order block by 1 pips, which is 10 points, and price rally higher into the today trading range, because we can see this particular prime take sweep this high, deliver us lower, then we see our price is moving. And also, I don't want to put this on my chart, but if you see, we have a specific price range here that market is trading on right now. So and it's a fair value gap and also a bearish order block. But we can see how market is not even respecting this area. Why? Because if it's going to respect this area, we are not supposed to continue seeing this seeing this thing happening on the market. All right, so that is an indication that it is not willing to respect. But if we price above, what I'm actually anticipating for is if market price above that area, I am actually going to take that as an inversion fair value gap. But currently it is a fair value gap or CB. And if we move above it, that if we price above it, that will be an inversion fair value gap, and it's also going to be an effective one because it is one that sweep or sell side liquidity. That's something I have learned this year, that if a fair value gap deliver impulsively lower and sweep sell side liquidity, then markets rally above it afterward, there is a higher chance that particular fair value gap is more inversion fair value gap is going to be more effective. All right, so having this already on our chart, we can decide to see whatever the market tips it hand to us tomorrow. It is going to determine how we are going to look at this market. And also we have this swing high, this relative equal highs to look out for. About this, I don't think we're going to take this out this week. If eventually we price impulsively tomorrow and next, and we get above this area, then this fair value gap, the weekly fair value gap that will be formed, will remain untapped. You see the condition I am laying. These are condition. I just wish I could write this condition so that next time I can make use of them. I think I'll have to start writing this condition. Imagine after your observation, you have a condition that you set aside, that if this happen, this is how it's supposed to be. If this happen, this is how it's supposed to be. And if it happen the way you want it, you take it very right. If it did not goes like that, you think it wrong. That is it. And you keep observing. Before you know, you have lot of hypotheses, and if you have more hypotheses, you have more observation. Let me tell you, there is no form of understanding that you cannot bring into this market. All right, more hypothesis, more observation, and more opportunity for you to participate. So this has brought me to the end of this video. Please, if this is your first time coming to this channel, please like and subscribe to this to my YouTube channel, and follow us for more. See, also So this is the weekly, wherever it stops. This is the weekly, the hourly contract for the XY, and we can also have same scenario. So see you tomorrow. Take